Hi, I'm John Stevenson. Welcome to the Guaranteed Retirement Guy Show. We're going to be talking today about who should not buy an annuity and who should. So let's talk about who should not consider buying an annuity. And this can be subjective, of course, but I'm just going to share this as my opinion on who should not. Well, if you don't have any money or if you have very little savings, absolutely you should not be looking at purchasing an annuity. I do have people reach out and they've got like $50,000 in savings. They're like, I want to buy an annuity for $20,000. And I usually tell them, don't do it. Just leave your money in your bank. Okay. If you're looking for contract guarantees, then don't mess around with $20,000 or $30,000. So my minimum anyways is $100,000. So don't book a call. If you're going to put in $20,000, $30,000, don't book a call with me, please, because it's not going to do you any good. And it certainly won't help me either. It'd be a lot of time for very little return for me. And I'm super transparent on that. Sometimes you just make nothing on commissions or hardly any on those amounts. So, and again, if you're serious about your retirement, okay, then you're gonna put in a lot more money because you want income. Okay, you want a lot of growth, and it takes a lot of money to do that. Okay, you can't put $20,000 or $30,000 and dabble in that. If you're gonna do that, just put it in stocks and bonds. Okay, put it in something that'll give you a higher rate of return, or even just a high yield savings account. Okay, that to me, in my opinion, is better. So if you don't have very much money, don't buy an annuity. You should not be looking at annuity contracts. They have surrender charges. If you take it out too early, you just don't have enough liquidity, okay? Another reason why you might not want to consider an annuity is the fact that you're a risk taker. You love risk. You cannot stand the idea of having a ceiling to your growth, okay? And guess what? Annuities, they have a ceiling. If you put money into a MYGA, a multi-year guaranteed annuity, you're limited to whatever the growth is. So whatever that fixed rate is what you get on your growth. So if it's 5%, then that's what your limit will be. A few years ago, that was 2%, and that was the limit. Okay, and a lot of people were okay with that. You know, they just wanted a safe place to park their money. But if you're someone who hates a ceiling and is okay with risk, then it's probably not for you. Okay, even an indexed annuity will give you absolute growth in the index, but it's all dependent on how much the insurance company allows you to participate in the index, as well as the cap that they put on it. If they put a cap of 5% on the S&P index and you're a risk taker and you're okay with the market downside, then you probably shouldn't be buying an annuity. You should probably just put it right into the index. At least that's my opinion. That's what I would do. So people who are independently wealthy, let's say they got $100 million. And I say that carefully because there are people with $100 million or more that do purchase annuities. Okay. So that can be something that still would be very, very good for your portfolio. But you know what? If you got $100 million and you've got it all in bonds and it's paying you 5%, you probably have enough income to, support you, right? And so a lot of times you have other investments, maybe real estate, derivatives. You might have bonds. Maybe you have stock that's paying you dividends. Okay, there's so many different things out there with people that have a lot of money that are typically not a great fit for contracts of guarantees because they're more on the risk side, which most of us are not in that position. Most of us are in a position where we've got some money and we want to protect a portion of it against risk. And we also want some guarantees so we can have peace of mind. And for most of the population, annuities are very, very good. And it's absolutely the correct choice. Okay. Another reason why you would not want to buy an annuity is because of these surrender charges. If you have, again, not very much money, or you just think you might need access to that money later on during the surrender charge period, then don't buy an annuity because you're going to get surrender charges. And if the interest rates go higher than where they were when you bought the annuity, then you're going to also have some high MVA charges, or what we call market value adjustment charges. So of course, vice versa. If you buy the annuity when the interest rates are high, like they are right now, and the interest rates go down, then you're actually going to have a positive adjustment from the MVA. So that's kind of nice. But yeah, if you need access to that money, you need liquidity within the surrender charge period, which is usually 7 to 10 years, then don't buy an annuity. Unless, of course, you only need 10% of the contract value, then most of them will give you a free withdrawal for that, okay? Another reason not to purchase an annuity, I would say the very fact, if you don't understand what you're purchasing, don't buy it, okay? If the guy that's selling you is telling you it's going to earn 20 or 30%, and you believe him, you're not a candidate for an annuity, okay? Because he's lying to you. And I don't care what the illustration shows. I don't care what the participation rates are. That is a current projection on current par rates and cap rates, which will change all the time, okay? So you cannot illustrate the next 30 years based off of current par rates and cap rates. It just won't work. All right, so let's talk about the reasons why you should consider buying an annuity. Well, if you're looking for guarantees as part of your portfolio and you want some guaranteed income and maybe you want some guaranteed growth and you want market protection, then annuities are great, okay? If you're looking for a vehicle for growth and also to have all of your earnings tax deferred, and that's even if it's any non-qualified annuity, money from your bank account, okay? Money from a CD, maybe you just want to put it in something where you don't have to be taxed every year on the earnings. Well, guess what? Non-qualified annuities give you that tax deferral status, just like an IRA. Now, if it's in an IRA, well, you already have the tax deferral status, but you still might want to purchase an annuity within your IRA because you've got the tax deferral already, but you might also want guaranteed income later on. And with a roll-up rate of maybe 7, 8, or even 9% on that account value, that income value account is going to grow substantially and give you a ton of income later on. I mean, if you got $500,000 going into one of these and it's got an 8% return for, let's say, 10 years, okay, and that's compounded, then at the end of that 10 years, you got a high withdrawal rate of like 7.5% multiplied by that income benefit value that has been compounding for 10 years on 8%. You're going to have a huge income amount, okay? And that's guaranteed. And so if you're looking for guarantees and you're looking for high income, then it's an absolute great choice for you. Now, I'm not saying to take all your money from your stock account, your mutual funds, or your real estate and put it all in annuities. You don't have to do that. Although I do have people reach out that want to do just that. You don't have to do that. Just take the portion out that you need for your income. And maybe you just want for a portion of it just as a safe investment that's protected against market losses, and you just want some straight fixed returns like maybe a MYGA would deliver to you, then let's talk. There's a link below this video and it goes straight to my calendar and we'll talk about all your annuity questions. Okay. If you're looking for highest income, we'll look at those. If you're looking for something that's linked to an index so you can have some growth, not all of it, but some of it, and in return have no risk at all when the market drops, then there are some great annuity options for that. And of course, you got the fixed side that's just giving you whatever the fixed market is, which right now it's 5%. It could be 3% next year. You just never know what the interest rates will do. So, but it does give you that market protection. It does give you the guarantees. If you want an income rider, there's a lot of value to having that, especially when you've got your other investments over here doing their thing. And when the market tanks, which it does, it's not a matter of if, it's just a matter of when. Okay. And you have to ask yourself, are you in the position for your account balance, your retirement account balance, to drop 30% and not have it affect your retirement? Okay. If you're not in that position, then you should consider annuities. You should consider income annuities. Okay. In my opinion, annuities make you a better investor because when you've got the guaranteed side taken care of, then the investment side, the risk portion of your portfolio can do whatever it wants. And you're not going to be sitting there lying awake at night wondering if you're going to have enough interest earned next month to give you enough income because you already have an annuity contract in place protecting you. That's what's so nice. It makes you a non-emotional investor, allows you to make the decisions you need to make and stay in the positions you need to stay in because you got the guaranteed side over here provided by your annuities. So that's my personal opinion on that. And I feel very strongly about it because I meet with so many people who are super excited, super confident when the market's up and everything's going great. But the minute the market drops, it's like the end of the world for them. And they're like, I got to get my money into annuities right now. And I'm like, you should have put your money in annuities 5 years ago. Not all of it, but at least you could have had some of it with guaranteed growth so that you're not all frustrated that the market's down right now. You wouldn't even care. Okay. So you have to think about the future. Don't think about right now. Everything's rosy and everything's great right now. People don't think about risk. They think everything's going to stay the same. That's what everyone felt like in 2008 before the housing. Thought everything was great before the dot-com crash. Okay. Everything was great right before COVID. Okay. There's always going to be something that's going to tank the market. So you have to ask yourself, you have to be honest with yourself. Are you okay with a 30% drop in your portfolio? Is it going to affect you emotionally? Is it going to affect you financially? Is it going to change your retirement? Is it going to change your lifestyle? If it is, you should definitely consider some guarantees as part of your portfolio. If not, then you're just being foolish. You're being greedy. And people that are greedy will eventually have it bite them in the butt. And it's always at the wrong time. Okay. So, and we've all had that. Okay. I'm not exempt from it either. Okay. But I use this from personal experience and also from people that I meet on a regular basis. People are happier when they have guarantees. They live longer and they're not as stressed out. And it's okay having some guarantees in your portfolio and not having as much growth in that portion of your portfolio for the peace of mind that it provides. And you can still have growth in the other section of your portfolio and have the best of both worlds. Okay, so if you want to book a call, you want to talk about your annuity desires, your income desires, your growth desires, then there's a link below this video. Go straight to my calendar and we can talk. So I'd love to help you purchase an annuity if it's the right thing for you. So again, if you like this video, if it's brought you value, please like, please subscribe, please share, and please comment below. I will answer those comments and do my best to answer your questions. And of course, for a more meaningful and personal conversation, then probably would be best just to get on my calendar. So again, thanks again for watching, and we'll see you in the next video.